Darsie, editor-in-chief here for T3 Live on a cold and wet morning in New York City. We got Winter Storm Nemo coming in, so if you're a subscriber, expect things to be a little bit lighter on the site. Some people who are commuting in from outside the city are probably going to be taking off early or taking the day off entirely, so I'll prepare for that. And from a market perspective, we could also see volume dry up a little bit as we head into the afternoon as people try to get home ahead of what's expected to be about 10 to 15 inches now of rainfall or of snowfall in New York City. Our friends in Boston are going to be getting a lot more, so everyone up there stay safe. We'll get right into the spiders here. This week has been a somewhat volatile week compared to what we've seen so far this year in January. Last Friday we closed on the highs. It was sort of business as usual for this market. Then Monday we got our first gap and go to the downside and our first close below the 8-day moving average. And for traders, that's a little bit of a sign of a complexion change. The 8-day moving average is something we watch as a short-term gauge of market composure. So people were preparing a little bit for a pullback, but what did we get on Tuesday? We erased all those gains. We closed back near highs. Wednesday we got a little bit of an inside day, some rest, which was a welcome thing for traders. And then yesterday we sold off hard in the morning, but we're resilient once again and we're able to close back up in that upper range. So this morning things are flat. It could be a quiet day, like I said. Let's go ahead and take a look at the spider chart. You look this week, you got last Friday's close at highs, a little bit wider range with that gap and go to the downside yesterday or on Monday, and then we've just been chopping around here. Yesterday it looked like things were starting to unravel a little bit before we got a firm bid back into the market. You got conspiracy theorists saying the government might be backing this market, or you have people manipulating this market. Whatever it is, we don't care about the why, we care about the what. The price action continues to be bullish. I would be a little bit more cautious at these upper levels. When you start to see choppy, erratic type action like we're seeing, it's often a red flag that a correction might be looming. So I definitely would not be aggressively initiating new short positions up or new long positions up here. But that doesn't mean you short everything. You maybe look for some selective shorts and have some contingencies in place in case the market does turn over. But I think right now is the time to be flexible. Apple. Yesterday, it's been sort of out of play since earnings. Apple, it's been a dead weight for the market as it sold off from above 700 down to below 500. It's been sort of hanging out here around 450 since earnings, and traders have been best served to sort of stay away from it and ignore it as it's been out of play. But that's hard. A lot of traders are conditioned to watch Apple because they've been watching it and trading it so much over the last few years. But you'd be best served to sort of play the in-play setups and look for the charts that are acting the best. And Apple is not one of those, but that might have changed in the last 30 minutes of the session yesterday. Famous hedge fund investor David Einhorn, he was making some noise about being upset with Apple in the past about not returning their cash to shareholders, but yesterday afternoon news came in that he's going to do a little more something about it. He's going to file a lawsuit against Apple that they were proposing sort of a blank check program that they have full authority over what to do with their cash, and they still don't want to return it to shareholders, but he is trying to force their hand and get them to return that cash to shareholders. And the stock ignited in the last 30 minutes of the session yesterday on that news. If you look at the chart, it's finally entered that earnings gap, which is a sign for traders that it could start to fill that gap from earnings. People have been waiting sort of for a big announcement from Apple, and yesterday could have been that. People have talked about how Apple's been sitting on a lot of cash, and that's a great reason to potentially own it because it could start to issue a bigger dividend and become more of a value stock. But to this point, there had been no sign of that happening. But yesterday, that lawsuit could be big for Apple, and we'll be watching closely to see what happens today if it gets any follow through. Right now, it's only up a couple bucks this morning. Google has taken over as the leader in the tech sector as it recovers. Last earnings quarter, we saw the leak intraday. We saw this big sell-off. The stock continued to bleed lower, but found support at its 200-day. And has rallied ever since and is back at all-time highs. It's sort of been a quiet rise back to all-time highs for Google as the focus has been largely, on Apple and its demise and stuff like that. And I feel like a lot of people haven't noticed this stealth rally in Google. This morning it was added to Morgan Stanley's best ideas list, which is helping pre-market. Google's up a couple bucks, opening at all-time highs around 780 is where last time I checked is where it was. If you go back to the chart, you can see it here. I mean, it looks like a great clean breakout after bouncing off the 200-day here. And if you're looking to trade in tech, I mean, I feel like this is the name you should be watching a lot more closely than Apple, even though Apple could get some follow through in the short term after yesterday's announcement. Amazon is one that has also been leading in tech, but yesterday it got some very bearish price action, but was able to rescue things a little bit from falling apart with a late day rally with the market. You see a big level of support here on Amazon that it was breaking below yesterday. Right here was the previous breakout level. We got some really aggressive selling early as it broke that level and broke these short-term moving averages here. But like I said, it rescued the day a little bit. And still, if you zoom out, this is not a terrible sell-off for Amazon after earnings, but it's something to keep an eye on. It's something that could potentially weaken as we go on in the next few weeks. The 3D printing sector, we'll transition to that really quickly. Yesterday, XONE was a new IPO in the sector. As we all know, DDD and SSYS are the two big names in that sector, 3D Systems and SSYS. And obviously people were craving another name in the 3D printing sector to trade based on the action in this XONE IPO yesterday. The IPO was priced at the top end of its range at $18. The range was $16 to $18 for the IPO. It was priced at 18, opened here around 23.50, traded above 27. Traders were trading it actively in the virtual trading floor, as Mark Sperling is very proficient in trading these new issues and IPOs. It dates back to his early days in the business during the tech boom. But obviously a lot of demand for these 3D printing stocks, and it's something to take note of. We'll look at DDD as well. Started to break down a little bit yesterday, around the time of that IPO. Perhaps people are moving some money from DDD and SSYS into XONE, or perhaps an IPO, a successful IPO like this, some people think it could mark a top in, this is DD, sorry. Some people think it could mark a top in a sector that's been really hot and is extremely highly valued. I don't know if I necessarily agree with that, but I think it's something you should definitely be watching. I think it'll be volatile over the next few days as the XONE IPO sort of starts to settle. And you look at SSYS, this is a thinner one than DDD. Really a lot lower volume. It can be somewhat whippy as it doesn't take much volume to really move this one around intraday. But these are definitely ones to keep an eye on. I don't know if I'd be leaning heavily long or short, but you do have sort of an ascending channel here in SSYS that could provide you a frame of reference if you do want to be short through the bottom end of that channel. Yesterday in the morning call, we talked about the mortgage servicing stocks, which is something that we haven't really talked about a lot before here. But it's a compelling story as these big banks, because of new regulation and new capital requirements, are forced to spin off their mortgage servicing businesses. And these stocks have enjoyed a huge run. The biggest name in the sector that we talked about is OCN. You see that huge run from middle of 2012. It was around $15, and now it's up around 41. Huge runs for these stocks, but I don't think necessarily that it's time to jump off the bandwagon yet. I think these have a lot of upside. You sort of see an upper level cup and handle pattern in OCN, and I think the story is just really compelling for these mortgage servicers as they take on these huge portfolios from the big banks and they service those mortgages. The most relevant news in the sector came yesterday. Home loan servicing HLSS reported earnings before the open, and you see this huge range that it traded in yesterday. Huge wide bar here. It was sort of a thinner name in the sector, which made it ripe for that type of price action. But all in all, it still traded and closed back up to these highs. So this tail is a little bit of a sign of caution, I would say, in this stock in particular. But the sector, I think, is healthy, and I honestly think it's headed higher despite the recent run. You look at gold and silver. That's something Scott has been following closely, as those get in really tight patterns. But if you're trying to day trade gold and silver, I would say that's not the best approach to take with these stocks. They gap up a lot overnight. Pit trading closes around 1, and they sort of chop around in the afternoon. You really get some peculiar intraday action in gold and silver. And if you're going to be trading these, I would say take a longer term perspective, or you're going to get shaken out repeatedly, and you're just going to end up frustrated. Yesterday you saw big gap down in gold. It traded back up above this recent range and then traded back down below it. So if you were trying to time gold yesterday, you were left really frustrated. Silver's a similar situation. The pattern is getting really tight. Once you get to an apex of a wedge pattern like this, you obviously get resolution. I wouldn't be leaning either way here. A lot of traders seem to be leaning long with currency wars brewing and stuff like that, but let the price action do the talking. That's our mantra here. We'll take a quick look at the banks, just because there was some notable action at highs yesterday, particularly in Goldman Sachs is one we'll really keep an eye on today. A big topping tail, push through failure. It was looking like it was headed for a very bearish candlestick before the market rallied. You know, put in a big push through failure, was set to close below yesterday's low, which is a big bearish signal, but it closed back for sort of a doji type candlestick, which just is some indecision. Perhaps a pause is needed in Goldman Sachs, but it's still above its 8-day. It's been riding it all year, but I would keep an eye on Goldman in particular in the banks. And that'll about do it for today's call. Like I said, it could be a quieter session with the snowstorm coming to the East Coast. Some people in New York might head home early. Everyone be safe out there with this record snowfall potentially in Boston and that area. But everyone, good luck out there, and we'll see you in the virtual trading floor and on the blog.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.